Yo guys, what is up? Here is this week's Wyckoff Wednesdays episode. It is a later episode. I'm just wrapping up my day, but I want to make this short video to give you guys the best trade you can take in just about 5 minutes. So when looking for this particular setup, it's a setup we've talked about several times. You want to look for the dominant trend and then you want to play with that trend. Now, in this case, the dominant trend is clearly bullish, right? We are in a very strong uptrend here and we are maintaining higher highs and higher lows. The price action is a bit dicey on here, but you can see that we are making higher highs and higher lows, taking out singular wick lows at times to push higher, but overall maintaining higher pricing. So we have our trend in mind. We're bullish, so we're going to be looking for some type of buy setup. Now, just as a preface to the actual setup, notice what this candle did here. So this candle took out this singular wick low and then came into this candle right here. So this is automatically going to be a candle of interest for us because this is just a series of mitigations. We've talked about this before on this channel. You can have a series of mitigations, call them a supply chain or demand chain. In this case, it's a demand chain because, we're in an uptrend. So if you're in an uptrend, it's going to be demand. A downtrend is going to be supply. If you guys have been tuning in, you know that. Now, with this setup, what we like to see is this is something that fakes people out a lot. So you get a discrete high, a low, and then a new high. Okay. Now this new high here, if we look at the wicks, is very discrete compared to this high here. And that's because it isn't really a strong closure above. It's just a couple small candles and then price starts to drop back down. So when price starts to drop back down, we should be wary of the fact that this is likely not going to be a strong low here. The strong low is this low, and this is also the low that produced the new high, right? This low produced this high here, and there's inefficiency that has not been met, and there's an unmitigated sell to buy. So we see that we have liquidity resting now at this level, and what a lot of smart money traders will do is we'll try to take it off this candle here because they think that the structure looks like this. They think that it's a high, a low, a high, a low, a high, a low, and a new high. But this is, again, a very discrete new high, and we have inefficiency resting here. Now, we view this more as liquidity than an actual structural low. So these are the trades that we love to see is when you have liquidity resting right above a POI, that's where you're going to take the trade off of, and you're going to put your stop just below that POI. Now, targets on this, we're in such a huge uptrend that we can go to the daily and pick a potential target. So if we look over here to the left, we are likely going to trade into this up close candle here. Hasn't been traded into yet, actually. So that's a good area for us to look at for targets. I'm going to drop back down to the hourly and place our TP right here. So this is a 1 to 5. You can also drop down to the lower time frames and get more entries with better risk to reward by tightening your stop. But the basic idea, again, is you pick the trend, and we're clearly in an uptrend. So you've determined the trend. Now you're going to be looking for this particular setup here, which is, again, the demand chain or mitigation chain is not a necessity. However, it does add to the confluence, but what you want to see is an unmitigated area of interest that has a bit of liquidity resting just above it in the case of an uptrend. So once this gets run out, you'll see that price makes a huge run. And also, this is a little bit of structure, but you have to be careful with how you look at it. It's very discrete structure, and this is an unmitigated region. So when you have unmitigated regions that cause new highs like this caused the new high here and ultimately here. When you see that there is an unmitigated region that causes a new high and then price tries to retrace to it, misses it, that usually turns into an area of liquidity. And you can see the entry is here. Price does not close below, convincingly. So the structure did technically maintain, and you can see since reaching that level price has just been mooning. So this is a perfect trade example in about 5 minutes of exactly what we like seeing at Aerial FX. We actually sent this out to our VIP members, so this was a nice trade, but I hope this video helped you out, guys. And this is just another thing that we like trading on top of structure and zones of interest. So if you like this video, share it, and we will speak to you all in our next video. Bye, guys.